Yeah, I think let's get started anyway. Who wants to wait until 7:45? Right. Let's get started. This is very interesting, hot dog. Um, your AAPLD. Nice pick. I think you should share your ideas more often, hot dog, because maybe we could also have participated in these profits. So the way I'm looking at it, of course, I could be wrong, and also technical analysis, like these patterns, maybe 70% of the times they succeed and then they don't. So the way I look at it, it seems to me, I tried various combinations that I know, and it seems to me like it's a cup and handle pattern and a price target of around 11.65. So you'd probably have more than $1 left on the table. It has broken through this diagonal line of resistance. Let me see how much it has gone on the RSI before. So at the very least, I can see that on the RSI scale, it has been able to go all the way up to 87%. And right now it's only on 76. So it's entirely up to you what you want to do, because there are times when, many times, like, it's not like 100% guarantee that the price target on technical analysis is always met. But when it meets, it's really a pleasure. When it doesn't, then there is always a regret that we lost out on some opportunities. As you can see, pre-market, the price is already very close to your target that you were looking at. Like, you are right now at 10.64 in pre-market, 10.64. And the target I have is 11.65. So the difference is not much. And given the overall market condition and everything, profit in hand is worth something. I mean, it's worth more than just on paper. Yeah. Yeah. Thanks, hot dog. Yeah. Makes sense. Yeah, but we'll share with other people saying that this is just speculative, and you guys take your own risk. I have taken risks before. I have done AV based on what I heard. I did JD.com based on what I heard on the chat. Of course, it was my own responsibility. Nobody put a gun on my head to buy it. But I think you have some really good picks, hot dog. Yeah. Yeah, take one of the things I heard. Have you heard of Ashwath Damodaran? He's a professor of portfolio management, I think, in New York University or something like that. And he's pretty good at valuation and all. So I heard him in one of his interviews where his personal approach is that when in doubt, take 50% of the profit. So if the stock goes down, at least you're blocked 50% of your profit. If the stock goes up, you still have 50% left, and you can capture the gains on those 50%. So no regrets. I have been doing that kind of approach, and that's why I do dollar cost selling, like dollar cost averaging on the way up, so that I can get as much. So you could probably sell part of it and wait for a little more. It's entirely up to you. And also, any of our ShareTreck members who look at ideas in the chat section, remember, it's just ideas. You have to do your own due diligence. If you put your money into it, it's your responsibility, nobody else's. So yeah, that's very well understood, and I'll keep on reiterating it. So this was good, hot dog. I have a bunch of headlines that I was going through this morning, and it's basically the warning from OECD that's going to take center stage today. Let me get you into CNBC, where I took up those headlines from, which I noticed. So US growth forecast sharply cut by OECD. So while we are waiting for movements on the charts to, lighten up, let me get us back into discussing what's happening with the market. The OECD just cut its US and global growth forecast. And it's a sharp downgrade. They have not got US growth pegged at just 1.6 for this year and a little lower at 1.5 in 2026. They are pointing directly at tariffs and policy uncertainty as the key drivers for this slowdown. So I think if the policy was changed, then there could be a little bit of relief, but I don't think that relief is going to be significant, and it's global. So there are other parts of the world which could do better. I'm looking at India, my home country from where I migrated. India doesn't have too much of global trade, and they have a huge population. Now look at China. China has a lot of exports. That's the only weakness for China. But again, China has huge population. So if they take up to develop their domestic market, they could do a lot of replacement of what was happening with the US. Likewise in Canada, my country of residence and my home now, Canada is trying to remove interprovincial barriers so that they can replace the trade that was happening with US with interprovincial trade. And that is going on well. And the new prime minister has gone fabulously with all the premiers of the provinces. In fact, many of the premiers gave press releases and press interviews praising how open the new prime minister was to their ideas. So I'm thinking that all of this could probably promote other areas in the world to do way better, and capital could flow out of US. Basically, the ongoing Trump tariff regime is weighing down confidence, not just here at home, but across global markets. It's another sign that we might be moving from soft landing hopes to prolonged drag risk. Then in Europe, Eurozone inflation came in at 1.9% for May, which was below expectations. The ECB's target is 2%. So this gives them room to cut rates without losing credibility. So that's the other headline I was looking at. And where is that headline out here? So ECB. Yeah, the thing is, in the morning when I look at this, I have a bunch of headlines and then they get lost somewhere. But that's the reason why I take notes of things I want to talk about. Here is the headline that we have for the Eurozone, right? Their inflation came in at around 1.9% for May, which is below expectations, and the ECB's target is 2%. So this gives them some room to cut rates without losing credibility. And yeah, that's something positive for Europe. And again, something that would suggest that Europe would have much more room to maneuver, because they are already talking. Like I've seen some press releases and news articles where you have the French president calling for more unity with Asia and Europe, while China and US hash it out. So those things are there. And there's a sentiment piece also that I was watching on CNBC, which pointed out that US stock rally since April might not be as convincing as it looks. ETF flows shows that daily trading volumes on stock ETFs are only about half of what they were at the beginning of the year. So it could also point out to the fact that the zombie effect that we felt earlier, when the wealth effect was in full swing, where people were doing systematic monthly investment into ETF, like same amount of money going into ETF every month, regardless of whatever was happening in the market. I think that is starting to fade. So that could also show for some weakness on the MAG 7. So while the S&P is moving up, investor conviction is actually fading. And what's more, money is flowing into ultra short bond funds, Bitcoin ETF, and value funds instead. That's classic cautious positioning. People are hedging, not chasing momentum. That's how I would look at it. And yeah, so that's what I saw in a bunch of headlines. Let's go back and see what's happening with our futures, how the markets are shaping up. It's still a little negative this morning, but the bright side is that we have already cut out of this diagonal line of resistance. We are out of this wedge and we have confirmed the bullishness. Overall market is super bullish, right? We are still in the bullish context out here. We have broken out of this diagonal line as well, which was a line which I thought if we crossed, we will definitely be bullish. So this is the line I was thinking about. Now we are going to test this today. And if we break out of this, then the next stop is this line out here. And this line, my friends, is a long-term context. I'm just going to take it into the monthly, recalibrate and bring it back to you here. See, this is where we hit once and the second time. So I am thinking that if we come here, there's a very huge chance that from here we'll start coming back down towards the center line, which will be one of our supports. So this is a larger context which I'm watching. And if that works out, then fine. If it doesn't, then we are going to learn something new and we'll start plotting new lines of support and resistance, ignoring this channel altogether, where I would assume this line to become the new support for a huge bull channel. What are the chances of that happening? Well, I don't know. What are the chances of that happening? We are all watching the markets unfold on a daily basis. So I'm going to put this on a 3-minute track so that we can actually see what is happening out here. You can see this candle moving around. So we are trying to gain. We are trying to get into the positive for the open. That's what is happening out here. And while we are looking at this, I'd like to talk about a few more things that I found on the news. I also look at Reuters to see what is happening because that's again a reputable news source. So the FX options market, according to Reuters, is increasingly signaling weakness in the US dollar. Investors are buying more USD puts than calls, which points to bearish sentiment on the dollar. At the same time, the euro and yen are continuing to gain popularity as investors look for more resilient currencies and amid global uncertainties. So in this context, I want to go and have a look at the gold chart. And I would like to look at it on a daily context. So this is the chart for gold. And this is a bull flag, which we broke out of. So we are in a bullish context at this point of time. And we have a resistance at 3,427. And we have a support out here at 3,233. So I'm thinking that I would definitely like to pick up some Z gold or something today on the Canadian side, even on the US side, because I want to get lower exposure to the US dollar. I've already moved some money, all my profits on a particular account from the US side to the Canadian side to avoid the exchange risk, as the US dollar will probably go down, I believe. But we have a reverse head and shoulder out here. If you look at just this isolated pattern out here. So I'm looking at this, I'm looking at this, and I'm looking at this. So if we trigger this by crossing this line out here, I think that then we would have, let me draw this line out here just to project it. So that, I think, if I move it across and put it out here, assuming we trigger this reverse head and shoulder, then we are looking at a new high of 3,726 for gold. Right? That doesn't mean that it's going to happen. We have not even triggered the reverse head and shoulder. But I'm saying that I could visualize a pattern forming. This may, decide to go down, like it may decide to go down out here, and then bounce off from here and retest, and then probably come down and then break down. So anything can happen. I really don't know how the future is going to unfold, but the probability is there that we may get a reverse head and shoulder. And if we get a reverse head and shoulder, I think more than 70% probability is that we will meet a target of 3,730. So with that bias in mind, I would like to go in and buy gold. Ideally, I should have bought it somewhere out here, but I was waiting for it to come closer to the support so that there is a much better probability of gains, that the possibility of gains outweighs the possibility of losses because we would be bouncing off the support. Unfortunately, that ship has sailed. So I'm thinking that I would like to take the risk of buying some out here with the hope that we are going to trigger this reverse head and shoulders. And one of the reasons why I'm taking that risk is because I think that this tariff issue is getting much more messier. I want to share with you something, my friends, something that I want to show you. Let us go to Google. And I'm going to type in here, Chinese newspaper reports about Xi and Trump call on tariff. Okay. So out here, I do not see any optimism. It's all the, like, US says trade war with China could ease after Trump-Xi talks. It's all quoting the US side. There is nothing quoting the Chinese side. Right? Now, if I go to see some Chinese newspapers, I'm looking at Global Times. Come on. Why is the internet so slow? Okay, so here we have a news article. Come on, load up. See, in response to a media inquiry regarding the White House's claim that the Chinese and US leaders are likely to speak this week, Chinese Foreign Ministry spokesman Lin Jian said on Tuesday that I have no information to offer. This is June 3rd, 2025. Right? So I am thinking that as the market starts falling, we have all these White House officials going out and giving interviews saying that it'll all get sorted once Trump and Xi sit down to talk. I don't think China is any kind of compulsion. I don't think China is in any kind of compulsion to talk with US. China has already seen how US treated Ukrainian president. They saw how US treated the South African president. They know that this is an unserious media mongering administration. They wouldn't like to put their president and their national prestige at risk, because the Chinese have got a whole lot of value about their image. I think, I don't know, many people in the West do not understand much of Eastern culture. I'll give an example. When you talk to a sales representative in, say, United States or UK or somewhere, they casually hand over their business card. In China, the approach is different. They hold the business card with two hands. They bow down a little and hand over their card. And when they receive your card, it's the same respect they give to the card when they accept it. This is the culture that's present in the East and in China especially. Now, they have a lot of value for respect. And if they are not respected, they won't do business with you. And the current administration has positioned itself, the image of the current administration is such that Chinese won't like to come to the table. That's the problem, right? So all that leaders like Besant and others come to CNBC or CBS or somewhere and say, yeah, we are very well advanced and everything is going to go and everything is going to go well, and we are doing absolutely fine. All of those things are not going to work because China doesn't think that they want to talk to the US. They don't have that feeling that no, if they talk with the US, everything will be fine. No, they know exactly what they want. They have a big internal market, and the Chinese government, let's be honest, like US government still has some compulsions because it's a democracy. But the Chinese government literally handles everything that will happen in China. Nothing can move anywhere without the Chinese government saying, yes, it's time to move. And China can pump in money to prop up the economy. They can do ambitious projects. And we all forget that China has already sent satellites to orbit the moon, spaceship to land on the moon. And the amount of scientific publications coming out of China is way more than what we have in the United States. And among the top 10 universities in the world, I think number 1 is Harvard. The rest of the 9 are Chinese universities. And again, Trump is going hammer and tongs on Harvard to punish Harvard for whatever he thinks is the crime they have done. So there is a lot of hubris, in my opinion, in the current US administration. And as a retail investor, when I'm looking at all of these things, that's why I'm continuing to be bearish. And I'm surprised by the resilience of the market at this point of time. I don't know what the hell is driving this kind of a resilience because, but then I'm a Canadian, right? So as a Canadian, I'm able to see it, I think, more objectively. And probably I'm also a little biased because US is anti-Canada right now, and maybe my Canadian patriotism is kind of hoping that US would change its ways, and maybe Canada is in the right by trying to build up more relationship with Europe and Asia and reduce its dependence on United States. So that bias may also be playing out. All of us, we think that we are totally unbiased. That's not right. Our mind plays tricks. We always have bias. So I would also caution being totally anti-American because, US may do the stuff that it does, but remember, it has got really good intellectual property. A lot of great American companies are out there which are leading the markets. It's a different story that the administration might create roadblocks and other barriers for them to succeed from an ideological point of view. But those companies are really strong. So one of the things that could potentially happen is all these big companies would move to other places. For example, Japan had already, during the first Trump administration, it had seen the writing on the wall. And now it has got factories in the US to produce all the consumption needed for US. But one senior Japanese official whom I saw on an interview said that he had a chat with Howard Lutnick at Mar-a-Lago. And he said that, Japan has already built factories in the US to meet all the requirements for US. But then Lutnick told him that now I think what you have to do is to export Japanese cars made in the US to Japan so that we can equal our trade imbalance. Now that kind of indicates, that gives many countries a chill down their spine, because it says there is no fairness out here. Like, how does a country end up getting a deficit? It gets a deficit because it buys more than it exports. And why does it buy more than it exports? Because people in the country prefer those goods that are being imported from outside, and people outside the country do not see more value in importing beyond what they have already imported. So every country has its own national compulsions. The Japanese prime minister would have to answer to his own constituents. And why would they suppress that local industry to balance the books with United States. At the end of the day, United States is saying you're responsible for your own defense. It's also saying you're responsible to guard your own ships against pirates. So there is nothing there for other countries. Earlier, there was this soft power from United States, which was providing them. So the reason why I'm explaining all of these is because I'm thinking that, you know what, I'm bearish about this market. And I'm bearish because US is losing all its soft power, and then it's losing its reputation as a reasonable player. And parallel institutions are getting set up to rival SWIFT, to rival the World Bank. And US is not part of those. And now, even with India, there was a recent headline from Howard Lutnick saying that he had a good chat with India, and India is earnestly trying to get into a deal with US. We urge them to distance themselves from BRICS. And there are times when Lutnick had said that if you we will penalize any country that aligns with BRICS and tries to push down US dollar as a reserve currency. Now, the US dollar status as a reserve currency came voluntarily because countries believed in the benevolent power of US and all the support that it was giving as a global policeman, making sure that pirates would not rule the high seas, making sure that Japan and South Korea had some protection against North Korea, and always intervening to try and settle things. Now that reputation is gone. So along with that, the power of US dollar as a reserve currency. Now, as trade moves away from the US dollar and and oil gets sold in other currencies, and countries start to trade with each other in their domestic currencies, the demand for US dollar goes down, and therefore US dollar becomes cheap. And when US dollar or dollar index loses value, as you can see out here, we look at the dollar index. That is going to the dollar index. Here it is the dollar index. And I'm going to, this is a daily view of the dollar index, 1 day view. And if you look at this, you can see that we are below the 100 mark. We are below 99. And we have been there for a few days now. This is a new development. It's and as we continue going down this path, we will see that our next support is going to be $97.298. This is against a basket of currencies. So as the US dollar gets weak, the imports into US are going to face tariffs, and the tariffs will be passed on to the consumer. And also, it will cost more US dollars to buy the same thing from the exporters. So the US consumer is going to find that it's expensive. And when I was a young child and when I was a young teenager in India, that was the problem for us. We had huge customs duties, which is a different way of saying tariffs. So we couldn't get imported stuff, and the domestic stuff was expensive because the domestic manufacturers knew that if they may price it higher, then we would buy from abroad. And they knew what is the price point with the tariffs. So they always had a higher price point just below the tariffs. And also they would control their supply, knowing fully well that imports will not substitute it. And therefore there was a very strong price support. There were less goods available, and they were pricier, and we had waiting lists for things like cars, telephones, scooters, televisions, and those kind of things. It was only after India liberalized and opened and reduced the tariff barriers and other things that Indian economy started growing, and people started getting choice, and prices started coming down. Americans are going to discover that in a hard way. It's all established economics, but we are looking at a new economics being written by the new administration. I would like to call it as Trumponomics, where Trump is saying that US as a franchise has got a lot of value, and the world is not paying the royalty sufficiently. So he's going to enforce the royalty by putting tariffs and forcing other countries to pay tribute. So let us see how that goes. Personally, I'm voting against that, saying that no, that's not going to happen. The rest of the world has grown up sufficiently. So that's why I'm bearish. So that said, let us go and have a look at what's happening in the stock market. Let us see pre-market action for some of these stocks. But before we do that, let us look at the 10-year yield where we are. Let me just recalibrate the charts so that we can see what's happening out here. So in my books, I would say that we are looking at a bear flag in formation. This is the bear flag. If the yields go down, that means that the price of these bonds are going up. That is demand for the bonds, and that's a very good thing. So I'm looking at this and I'm feeling optimistic that probably the bond market is not as freaked out as we think it should be. And you look at the MACD, it's also very bearish. So the yields are going down and the value of the bond is going up. The value of a bond goes up when there is more demand for it than supply. So things are looking pretty decent out here, but the bond yields are quite elevated. So any bond that was issued in the past at a much lower price, maybe 10 years ago, let's go into a monthly chart and recalibrate this and look at it. So anything that was issued at a much lower yield, that's going to be refinanced, and it will be much better for as the yield starts coming down, and when it goes down to 0.49 or something like that, it would look pretty good. Or what am I saying here? Let us look at this inverted logic again. Let me just look at a bond price. Let us say the bond price is 100 and the interest rate is 5%. And if the price of the bond goes up to 110 and the interest remains at 5%, so you're getting lesser interest for that. So as the bond price goes up, the yields continue to go down. So that's a good thing. And we are in the right place at this point of time, but we would like to see the yields going down further. Now let's go into AI and look at NVDA. What is happening with NVIDIA? Pre-market, they're looking good. We are up 0.52%. Meta is almost neutral, I would say, out here. Meta is pretty neutral. Yeah, it's US deal is part of the US debt is part of the problem. You're right. You're right, hot dog. Yeah, it's part of the problem. Meta is positive now. It's getting into the positive side. So pre-market, Mag 7 is starting to look good. Google is a little negative at 0.29. Amazon is also a little negative. Apple is up 0.08. Microsoft is down 0.04. Tesla is up 0.32. Yeah, yesterday we had seen a drop, so there is and we have this diagonal line of support. So yeah, that could be a little bit of a dead cat bounce. Pre-market is never to be trusted. Once the market opens, I'm expecting things to go down again with a support at around 339.39. Oracle is also looking a little negative. AMD is slightly positive. AMD has got this bull flag out here, in my opinion, and it could break out on the upside. SMCI is also positive. Broadcom is also positive in pre-market trades. Palantir is positive in pre-market trades. It has broken out above this minor line of resistance that we had. It broke out yesterday. And if it closes above this today, it would confirm this support. And then we can take this as support and look at further building upwards. So today is a test for Palantir. SMH is mildly down. Where NVIDIA goes, so will SMH. Tempus AI is also positive. Hot dog, do you still have Tempus AI with you, or you already sold and taken all profits? So coming back to FNGB, which is up 0.10%, FNGD is down 0.13%. Today I will buy a little bit of FNGD to dollar cost average. My average price is in the 19s and 18s. So I have to bring it down. So I may buy 100 FNGD to bring it down because I am still convinced about the bear case. Rigetti still a little positive. It's on a bull channel, so that's the only redeeming feature. I had to wait a long time to get back my money. SMR is going big with the positive policies from US for small reactors. AV is also improving. It's on a bull channel. This has to be green in color. It's on a bull channel. It was on this bullish channel earlier. We have broken out above this. So I'm going to mark this as green. But we still have to confirm. So today, if we close above this diagonal line of support, we would confirm that we are above this line. And then we can assume that this is going to be a confirmed support. And we should aim to break out above resistance of 190.024. AV. It's a drone company which is expanding beyond drones into defense capabilities. The latest use case for AV is drones used for power line inspection industry exploding, expected to reach 323 billion by 2032. Earlier, it was just defense. Then they expanded with collaborations to expand their defense footprint beyond just drones, but more use cases with drones for defense. And now it's also inspection of electric power lines. And that could lead to other things like inspecting dams and maybe other areas. So I'm very optimistic about AV. So that's the use case out there. And again, these are all my personal opinions, not financial advice. Anything any of our subscriber mentions in the comment section and whatever I mention here is all just our personal opinion. You can take that as an idea, explore it, do your own research, consult your financial advisor, then take your decision. Don't just buy because we are talking about it, because sometimes we don't know what we are talking about. We are just retail investors, and this launch is just a meeting point where we can discuss our ideas and do a little bit of technical analysis to see how sound they are. So that's what we have out here. Let's look at genomics as well, because we are in the launch. We can talk about anything. Prime is looking good this morning, up 2.52% in pre-market action. Intelia is up 1.26% in pre-market action. Caribou Biosciences, no trades pre-market, not looking great right now. Beam Therapeutics is up 3.64%. It's still, they are talking about sickle cell therapy receives FDA orphan drug designation. Wow, this is good. This is good. This will save some costs for Beam Therapeutics. And getting orphan drug status now after having 2 gene therapies for sickle cell disease means something really big. Basically, this base editing is, in my opinion, superior to what Casgevy and LifeGenia are doing. So I'm thinking that this is bound to give a jump for Beam Therapeutics, at least momentarily, and we could potentially aspire to break out of 17.40, which is our resistance for today. So pretty bullish this morning. That's a good news. Maybe I could make a video on that and let the wider audience know about it. That would be a good positive to talk about in the channel. Altimmune is up 1.33%. It had a support at 5.32, and pre-market it has gone above it. So yeah, yesterday we broke down below the support. I'm not changing the color of this one. Continues to be support for today. And overall, I would like to just show you what is happening out here, in my opinion. I'm drawing too many lines, and I'm loath to do that. I'm trying to reduce the number of lines on the chart. I'm going to delete this after I remove it. But for today, our resistance is likely to be 5.60 because there is this line I can see we have followed in the past, and I think we are still following it. So I'm just going to leave this for the day and delete it tomorrow. This is one of the resistance we have. Verve has got no trades pre-market. Editas is up 1.69% in pre-market trades. We had this long wick that is going up out there, and it had pierced the I think minor support that we had at 1.90 and come back again. But today it will aspire to inch closer towards it. I'm assuming that genomics generally tends to be positive when the overall market is positive. And as I explained to you in painstaking detail, why I am bearish about this market, that translates to my bearishness about genomics as well. So if the overall market is irrationally exuberant and positive and overlooking a whole lot of negatives, I would say there is huge risk in the market, and when the downside comes in, it could be severe and it could be steep. And that could apply to genomics as well. So please keep that in mind. Illumina is down 0.11% in pre-market trades. It continues to have this diagonal line of support out here. And for today, we have additional support with the horizontal line at 80.59. Pre-market, it's at $81. CRISPR Therapeutics, it's up 1.27% in pre-market trade. 36.995 is pretty inexpensive for CRISPR, I would say. But we saw the book value per share, right? It's still below 36. I think it's somewhere around $27 or $28. I think I mentioned that in a video that I made recently. The title was, "Is CRISPR Inexpensive?" So I would still wait for CRISPR, because overall market is weak and we could get CRISPR at a much cheaper price. That's my personal opinion, again, not financial advice. CRISPR is one of the better companies along with Illumina in this watch list. Allogene is up 3.94% in pre-market trades. And we had a resistance here at 1.35, which is going to perform the role of resistance today, but we could potentially break out of it. Even if we break, I would always say that we should retest it and bounce back, and that would mean that it continues to be a support. So I'll wait for all of those sequential things to happen before I mark this green. So that's the resistance there. Grail is up 3.25% in pre-market trades. Minor line of support, 37.78, still persists. PICB is down 0.91% in pre-market trades. This is a zombie company, in my opinion. They don't have enough funds, in my opinion. And that's what is causing this continuous loss of value. It has become a penny stock, which I was afraid of. It's been a penny stock for a while now. And it should probably get, it would get a NASDAQ notice for lack of compliance, and we may have a reverse split happening. Just like Ginkgo Bioworks. That's what I'm worried about. So I won't touch PACB right now. Again, personal opinion. ARCG is up 0.46%. If the overall genomic market goes up, ARCG will move up. Vertex is up 0.76% in pre-market trades. We could get Vertex cheaper. Now, I'm going to draw this familiar pattern. So I think that we have triggered the reverse head and shoulder already. So we should be going down given the overall market context, and Vertex should be available cheaper at a later date. MACD is still bullish, but momentum is still lacking. So if overall market continues to have exuberance, we'll continue to see Vertex going up, and probably will break this reverse head and shoulder pattern. And maybe later on things will pick up. But right now we are still not out of the woods, even though we didn't come down and meet the reverse head and shoulder target. We have a bear flag out here. This is a bear flag. And the bear flags most of the time break on the downside. So that's the reason why I'm still keeping this intact, the reverse head and shoulders. So that's what I'm thinking. Orphan drug designation means that FDA is going to give some preferential treatment to this drug because the current standard of care is lacking either in terms of effectiveness or in terms of affordability, or that the current therapy, which is getting the orphan drug status, is hands down superior to anything else that is in the market. And when FDA gives an orphan drug designation, certain FDA fees and other things are excused. So the cost of bringing it to market goes down. And also they get a priority review, I think. So there is a whole lot of those kind of benefits. Yeah, I would definitely make another video on Beam hot dog. I'll make another video on Beam. And yeah, I'll try to do that this week itself and put it out there and put in context this orphan drug status, and also why I think Beam's SCD therapy is superior to Casgevy and LifeGenia. I mentioned that in passing before. I'm always wary that I don't want to recycle content, but I think putting it in a fresh pair of words is, I think it should be worth it. I'll put a disclaimer out there. I've spoken about it before, and yeah, so I'll do that. That should be no problem. Well, so that said, let's get back to what we were doing. Ginkgo Bioworks is up 0.70%. Now let's go back to where we did the split. The split happened out here. And at that time, we were at $9.27. I think the reverse split was 1:20, if I'm not mistaken. Let me open this up. Split 1:40, 1:40. So at that time, we opened at around 9.31 on the day of the split. Then we dropped, then we went back again, and then we started dropping. We went all over the place, but at this point of time, we are at 7.18. So let me just quickly take a calculator and divide 7.18 by 40. That's around 17 cents or 18 cents rounded. So the original Ginkgo Bioworks shares is at 18 cents. So friends, what happens is when you have a reverse split, it enables the company's share to go down further. So if it was a penny stock, and if it goes down from 99 cents to 60 cents to 50 cents, people start panicking and they start selling, and it races down to the bottom much faster. But when the reverse split happens, then suddenly it's a $10 stock, and you are thinking, oh, there's a lot of value in this stock. But the original holders are losing value, right? So if PSEB did a reverse split, right, then if it does a reverse split like 20-1 or 10-1, then right now the stock will be $9.78 per stock, and it will start looking good. But the really good way for a stock to add value is by share buyback. If PSEB decided to buy back, 10% of its shares, then the share price would go up by 10% and firm up by 10%. That's a healthy way to do it. But reverse split is not a healthy way to do it, and it's definitely bad for the shareholder. That's my personal opinion. I would like to hear from you guys what you think happens with the reverse split, right? So let's go and have a look at the economic calendar and see what is happening out there. If there is anything that we could see, I'm going to clear this and look at just the US. I have noticed that after updates, my computer has become slow. I have a high-spec computer with a dedicated GPU, and still it becomes slow. What's happening here? I just said I wanted US only. Yeah, it's US only. So why is the filter not working? Yeah, here you go. George's job opening is going to come at 10 a.m. I don't think we'll have the live stream open up to 10 a.m. LMI Logistics Managers Index. I don't know what that means. It came in at 59.4 against previous of 58.8. Let us see what this means. The US Logistics Managers Index rose to 59.4 in May 2025. Okay. Smaller firms were the primary drivers of logistic activity, reporting a robust LMI of 60 was significantly higher than 56.2 recorded by large companies. Reflects a complex mix of trends, slowing inventory levels, which at 51.5 are now hovering near no change, and rising costs across the board. Inventory costs in particular surged by 2.8 points to 78.4, reaching their highest level since October 2022, when firms grappled with the aftermath of COVID-related inventory buildup. Let me take this in and go to, let us say, Claude AI. And I'm going to ask it, today we had US PMI, US NMI. Here are the details. Please explain what this means to a retail investor. And then I'll give it this thing. Let us see what Claude says. This is a good idea of showcasing the capability of AI. US Logistics Managers Index is essentially a report card on how busy and expensive the logistics industry is. Think trucking, warehousing, shipping, and supply chain management. Here is what today's reading means for you as a retail investor. The big picture, an LMI at 59.4 indicates the logistics sector is expanding at a healthy pace. Any reading above 50 means growth. At 59.4 suggests solid activity. The recent bounce back from March's low shows the sector has some resilience. That is a good thing. Key investment implications, small versus large companies. Small logistic firms are significantly outperforming larger ones. This could signal opportunities in small cap logistics stocks or ETFs, as these companies may be more nimble in capturing current market trend. Rising costs are a double-edged sword. Inventory costs hit their highest level since October 2022 at 78.4. This means logistics companies face margin pressure from higher operating costs, but it also suggests strong demand that allows them to potentially pass costs to customers. Inventory trends matter. Companies are being more cautious with inventory levels, barely growing at 51.5, which could indicate either efficient inventory management or concerns about future demand. This reflects retailers, manufacturers, and logistic companies differently. So let us just look at current happenings, right? Many companies paused their order as soon as the tariffs were announced. And many companies also forward-loaded a whole lot of inventory in anticipation of tariffs, because Trump was signaling that he's going to do tariffs. They didn't know how much, but they knew that tariffs were coming. So could it be that initially we saw the economic data showing a jump, and also our consumer data and everything did not show much of a blip because front-loaded inventory was supplying? And then we had reports that truck drivers were not getting sufficient business in Los Angeles port area, and some were probably going out of business. Maybe all of those things are getting reported out here, and we are probably seeing a trend change. And sector to watch: consider logistics REITs, trucking companies, freight railroads, and supply chain technology firms. However, be mindful that raising costs could squeeze profits in the near term. UNS activity levels remain strong. The mixed signals suggest the Goldilocks scenario, not too hot, not too cold, which often favors continued economic expansion without triggering aggressive policy responses. Let me go back and see for which month this was. This was in the month of May. In the month of May, we were in a situation where, if I'm not mistaken, we saw companies freezing their orders due to the hike in tariff. So, yeah, so that's where we were. So probably in the month of June, we would see something different from what we are seeing here right now. We'd see a smaller reading. So that's what I am thinking. Yeah, Hot Dog, do you have any insights out here? Hot Dog is saying reverse splits are big red flags for me, especially for medium, small companies. Agreed. Yeah, I think agreed. Yeah. So that's the way I'm thinking. It's very nice for me also out here because I'm not just a content creator, but I'm a retail investor. And the reason why I started this channel was to have dialogue with fellow retail investors to just, bounce ideas off and bounce concepts off to learn and validate. Right. So that helps me a lot. And I hope, Hot Dog, it helps you. Inf used to join us on a regular basis, but now he's been asked to come to work. So he's in the morning, he's usually driving to work and getting there and doing his job to prop up the Canadian economy. So I do miss Inf, but thanks for your company, Hot Dog. And as the day goes by, I'm hoping that more retail investors in our channel will find time to join here and start having discussions both ways. Till then, let's plot on. ARCG is up 0.46% in pre-market trades. Vertex is down 0.32%. Ginkgo Bioworks is up 0.42% in pre-market trades. Again, range bound for quite a while, right? All the way from 10th April, it's range bound between these two ranges. And it remains so going forward as well. Unicure up 0.17%. Again, range bound. IMTX down 0.17% in pre-market trade. Still above this minor line of support. PGen waiting for August. We'll see what happens. This is a bear flag in action. So it's going to come down. I'm waiting for it to come down. I have not yet done a study on its balance sheet to see how much cash runway it has got and what are its costs and other things. I'll have to do all of those things. I'm being a bit lazy. I got tax season coming up in India for which I have to do the filing. I have got tax season things there. Then, of course, I have a couple of rental properties where I have to do new tenants. So doing a little bit out there as well. So those are keeping me busy. I have a very good friend coming in from Dublin on the 16th for a 6-day stay with me, a visit to Toronto. I'm preparing for that. Getting a bit very busy out here, but I have to find time because the share price is low and the gains would be significant because markets generally forget what is happening. They show a blip when a news comes in about a BLA. I also got to read up on the area of the BLA to see what's the market size, what is the current standard of care. So a lot of things I have to do for PGen. I'm going to do that and watch out for that video. That will be good. PODD was something we picked up. It is still a bull flag, my friends. This could explode even more. So let us see what is the all-time high for PODD. The all-time high for PODD was 335.57. So we are still ways away from there. So upward break is still possible, still bullish about it. But I wouldn't buy at this stage because the risk of losses are far more than the risk of gains out there. Yeah, so that's what we have there. Let's go and have a look at futures where they are. Futures are continuing to try to improve. The market is still opening. The future market is still negative. Dollar index trying to improve. and going to the 100 mark. It has got a resistance out here at 99.19. Right now we are at 99.14. So if we break above this, then we'll be still range bound again. We'll be getting back into the range. Probably I'll end up increasing the range at a later date. But the market is not showing resounding confidence out there. The yields are looking decent in a short-term perspective. But overall, yeah, the US wants a better price for its bonds so that it doesn't have to pay too much to refinance its bonds. AI, NVDA, still positive. And I'll look at FNGB, it's still positive. Where is MAGS? MAGS. I don't see MAGS here. Let me go to the ETF section. We have another section for ETF. And out here, I'll add MAGS. Now, let me use MAGS as a proxy for Magnificent 7 and see what the whole thing looks like. It exactly matches NASDAQ and S&P 500. It's almost a mirror image out here. We have a gap fill to be done. This is the gap fill. This is the gap fill that we need to be completed. And then this is a bull flag, which broke out on the upside. Let me just show you. I just want to show you my thought process. Some of you might also be doing technical analysis. So if I make any mistakes, you guys can correct me if I'm wrong, and I get validated in the process, right? So we broke out of the bull flag, and then we had a trend reversal out here, and we'll continue to get support at 49.86, and we'll also get support at around, let me just do this, 51.00 or $51. We would get support today at around $51. And if we bounce off from there, right, we have potential of creating a reverse head and shoulder. That is a bearish case. If we do a reverse head and shoulders, then we come down and do the gap fill as well. That is a bearish case. In the bullish case, we could bounce from here and continue moving upward. And we still have a long way to go. The all-time high is around 58.35. There's plenty of room. RSI has got room to go before it becomes overbought. And it has been all the way up to around 81.95 on the RSI scale. So plenty of room. However, unfortunately, MACD is bearish. That's the only negative factor out here. So there is a bullish case as well as the bearish case. We can't count the chickens before they hatch. So for the reverse head and shoulder, we need the shoulder to be formed and we need it to be triggered out here. If it doesn't get triggered, no, we don't have anything out there. And even for the bull case, it needs to be triggered up. Now the bull case has got a support out here. This is what the bull case is resting on. So this is what the bull case is resting on. Let me put it forward. Just a second. Sorry, I'm just fine-tuning it, trying to find out touch points. Okay, so this is the best we have. This is slightly above, but this is the best we have. So this is the bull channel that we got, and we have touch points all over the place. So this is the bullish case. In the bullish case, price comes here, bounces off, bounces off, bounces off. Let me just take the pen out here. So it comes here, goes up, goes back down, and goes up, and then down here, and then goes up again. So this is what it may do. That is the bull case that I'm looking at. And then the bear case is a reverse head and shoulder, which could potentially see us go from here to here and then back down here. And then in the process, what we have is shoulder, head, shoulder, and then that would allow me to go and pick up to the neckline out here and pull this out and put it out here. And maybe we go all the way to 47.18, and in the process, we close down this gap that we have out here. So that's what I'm seeing out here. So that's one possibility. Now, having said that, I think I would like to wind up and just look at gold, what's happening with gold. Gold is continuing to go up. Let's, NVDA is still positive. Okay, so I'd like to just wind up the day out here, go have my breakfast, get ready to go for the market open. And Hot Dog, thank you very much for joining me. If you have any pointers or ideas for me to explore for today, something you are working on, just let me know. I'll check it out. Otherwise, I'll catch up with you again tomorrow. And bye for now.